Today, we will examine the performance metrics from MT5 for both a copy account and master account, conducting a comparative analysis of the two risk models within the BRN strategy. The contrast in average returns between the two risk models within the BRN strategy is notably substantial. Investors possess the flexibility to establish and secure their preferred risk appetite anywhere along the spectrum without being confined to either extreme. It is essential to note that our traders do not directly manage client capital. Instead, investor accounts somewhat serve as margin accounts, acting as liquidity for our traders' virtually funded proprietary trading accounts that are contracted through our subsidiaries. The investor accounts will then subsequently replicate the market executions of the proprietary traders. This affords us the opportunity to enforce maximum loss limit restrictions on the proprietary accounts, enabling us to leverage the cash accounts of investors within the confines of the trader's restricted margin. In the context of the BRN, traders operate under a 7% maximum loss limit, hence the nomenclature Max 7 for the model. Here, a transparent showcase unfolds, spanning 4.5 months of employing the maximum risk model on a six-figure cash account. The copy account on display managed to configure a 293.12% ROI with a peak floating drawdown of 29.47%. As previously highlighted, the calculated approach to controlling risk here involves leveraging full margin with the proprietary accounts maximum loss limit of 7%, rather than aimlessly subjecting capital to arbitrary risks. The equity drawdown currently displayed is a normal occurrence for this model, making it only suitable for investors that are comfortable with larger fluctuations on their capital. Nevertheless, when examining the ROI over a 4.5-month period, the lowest risk model in our repertoire seems to present a less appealing outcome in comparison to the maximum risk model. It is worth noting, however, that a significant portion of investors tend to adhere towards the lower risk models. On this account, the total 4-month ROI amounted to 11.28%, with a peak floating drawdown of 2.77%. The current equity drawdown present on display is rather unusual for a low-risk model of this nature, but as seen here, it can still reach the negative 2 to 3% mark. The total exposure our equity protector allows for this model is 7%. We do indeed utilize the use of leverage for high-risk investments on the financial markets. On the contrary, we also provide very low-risk models tailored for investors who do not want to miss out on long-term growth with minimal exposure. The strength of the BRN strategy is further reinforced by our top-performing fund manager, duly licensed in Dubai by the UAE government. Notably, the manager holds the current all-time record at one of the largest proprietary trading firms in the world. So rest assured, we employ leverage judiciously from executions conducted by certified traders. In conclusion, whether opting for our maximum risk models or lower risk alternatives, our trading practices adhere to using controlled risk. Should you desire complete disclosures regarding our performance or wish to undertake external audits on trading account history, please feel free to reach out to us without hesitation. We are pleased to welcome and address any inquiries you may have regarding our performance or risk management protocols.